Hello, everybody. Welcome to Tuesday. The S&P 500 was up 1.65%. A lot of that came in the overnight action. I think the market is starting to slowly realize that the banking situation is being backstopped now by the U.S. government. And as I mentioned before, this is really important. You know, if the U.S. government can completely turn around the economy and make the stock market go up dramatically in 2020 during a pandemic, it can certainly handle this banking situation. You know, someday at some time down the road, we might not be able to do that, but we're still able to do that now. And there's certainly a political will to do that here to try to make sure that as we head into a presidential election year, things are still okay. However, we did have the CPI report come out this morning, and it was actually better in terms of the total top line inflation. It's at 0.4%. Expectation was at 0.5% for month over month versus last month. Lower for the year over year, which is good. And then on the month over month for the core, it was slightly higher than expected, still doing quite well on the year over year. So a report that was, I think, right in line, doesn't put pressure on the Federal Reserve. So you have a CPI report that comes out that shows, okay, we don't have to go super aggressive on our interest rate increases. And at the same time, we have this banking situation that you don't want to push, over the edge. So I would expect that a quarter point increase would come into play here instead of the half point increase that was expected. The market's going to respond positively to that. And we moved back in. We originally went in with this morning's plan of moving out some of the assets in our taxable accounts into safe positions like T-bills because of the triggers that we've got. The market was very strong. We decided to leave those as is and then actually move back in our retirement plan accounts where we don't have taxes into their full invested positions. And so that's now set up. We're back in the market. We'll see how this plays out. This is just how this goes right now. Again, we have a faster trigger on the retirement assets because we don't have taxes. So we'll try to catch those trends as far as that goes. And it's been working fairly well so far, and especially in the last few weeks. And then we have a much lower trigger on our taxable assets. And that kind of gets us through some of these things without having to make a lot of transactions that end up on the tax return. So that's what's happening today. Really, really crazy environment, kind of a tug of war going on right now between different participants.